November 30th, Morningstar hosted the Canadian Investment Awards to award outstanding achievement in the Canadian investment industry. One of the award categories is the Manager of the Year, and in that we have three managers that we know: domestic fixed income, domestic equity, and foreign equity. With me I have David Leary. Dave, what do we look for when we're trying to award these awards?
Well, essentially we start our process with, who are our favorite managers out there? Who are managers that we know have a well thought out investment process, apply it consistently, have demonstrated strong stewardship, and have had excellent long-term results on a risk-adjusted basis. And then from there we say, out of these, which manager deserves to win. So the result of that is sometimes we'll award managers that might not be at the very top of their category in a given year. And there may be other managers who, sort of a one-off performance have outperformed them. But we don't ever want to award a manager where we are uncomfortable with their process. We're afraid that, in a future year the fund might blow up and there are concerns about something like that, or we're just uncertain about it. So we really stick to those managers that we really can endorse over a long period of time, and then just who's deserving in any given year.
Yeah, we had a repeat manager for Fixed Income Manager of the Year, TD Asset Management, and like last year we awarded the entire team. What do we like about TD? And there's more than one thing.
Yeah, I mean there's a few things. So it really is a team approach. It's that term gets bandied about a lot in the industry these days because it's a lot easier for a fund company to say they're run by a team, so that if anybody, any important person leaves, that's not a big red flag. People don't get as concerned, as opposed to you advertise one particular person and then that person leaves your firm. You've got some explaining to do. So the term gets bandied about a lot, but in TD's case, it really is a team approach. So they've got an 8-member credit desk who just analyze the credits and the creditworthiness of the issuers that they're purchasing the debt from. They have a 25 or 26-member risk management team that's their sole focus, is just focus on risk management. So they put a lot of emphasis into protecting capital and protecting on the downside. And they work well together. They, the risk with having too big a team is that you've got just too many different departments. That doesn't appear to be the case with them. They talk the same language and they interact well together. And it's ended up resulting in outstanding long-term returns. So if you look at their risk-adjusted returns from 1 through 15 years, it's similarly impressive.
Yeah, for domestic equity, we awarded Martin Ferguson specifically for his Mauer New Canada performance. And here's a firm that we like in Mauer, and generally there is a consistency to their process. Last year we awarded Jim All for Manager of the Year. This year Martin Ferguson. So there's something consistent there. What specifically about Martin Ferguson do we like?
Yeah, I mean, so as you mentioned, we generally like Mauer as a team, and they do. I'm going to sound like a bit of a broken record here, because each of the managers that we've awarded work on a team, and they do work well with their team. In this case, we feel like Martin Ferguson, although he's part of a team, we're still comfortable singling him out for recognition, and because he does really sort of lead that Mauer New Canada fund. So he looks for consistent businesses, quality businesses that have consistently generated shareholder returns, strong ROEs. He spends a lot of time focusing on the management of the companies that he's investing in, and do they, are their interests aligned with? Do they practice good stewardship? Are their interests aligned with shareholder interests? Stuff that we look for in stewardship when we're evaluating fund companies, and that's resulted in excellent long-term returns on a risk-adjusted basis, which is quite important when you're dealing with a pretty aggressive and volatile space such as Canadian small caps. One thing to note: his fund, the Mauer New Canada Fund, is closed to retail investors, but it is available through BMO and HSBC. Both have small cap offerings that are clones of his Mauer New Canada.
Yeah. A new category, new award this year was the Morningstar Foreign Equity Manager of the Year, and we award Mackenzie Ivy's Paul Musson. Here's a manager that will have strings of significant underperformance because of a fairly disciplined approach he follows in looking for blue chip companies and quality management, and yeah, so this year. He won that award.
Yeah, I think looking back 3 years ago, people might have thought we were crazy if they could sort of look forward into the future and say Morningstar's awarding Paul Musson. I think those who really knew his strategy well probably wouldn't have been surprised by that, but the average investor might have been. And that's because the fund had been underperforming through most of the mid-2000s. You had starting in early 2003, the beginning of what was really quite a remarkable bull market through to 2007, late 2007, which was driven largely by cyclicals and materials, commodities, energy, things like that, and they typically avoid cyclicals. It's not to say they won't ever invest there, but that's just not the place that they focus. What they look for are quality businesses that have a wide economic moat and have been able to generate consistent cash flow and ROE. And so that's not typically found in cyclicals. So, and the nice thing, what we really like of it, is that they've stuck to it. So during that period where people thought they were nuts for having very little energy and materials exposure, they stuck to it. They didn't say, well, we've got to start changing our discipline because clearly the market's changed. They said, it's going to come back around. And it did in a huge way. So in 2007, late 2007, early 2008, a lot of their competitors were down. It wasn't uncommon to see a 30%, 40% loss. Some were down 60, 70%. Yeah. This fund was up, I think, something like 2-3% year to date, which is outstanding relative performance. They've done a fantastic job just protecting investor capital. And over the long term, it's not going to generate you the flashiest returns, but for a risk-conscious investor, it's a fantastic offering.
Yeah, thanks, Dave. For more information on the Canadian Investment Awards, please visit our website, www.morningstar.ca.